So click on the video. I guess the social credit rating capture your eyes. What's so interesting about this whole process is the Western media around the world is blame and shame, and as well a glimpse on seeing how China's going through with their social credit. And many people are saying that's George Orwellian, that's Big Brother. Oh my gosh. However, many countries, I won't say any countries, but I know UK and Australia, and I'm pretty sure parts of other country well are going through the similar same thing as they're strictening with tight lending. Now, of course, to buy a house or obviously lending a house or having a loan is those who has a large amount of savings, whether it's 5% or 20% or whatever the number is, right? I'm not going to get into details about it, but you understand what I'm saying, right? Then back in the days, it was affordable for sole income breadwinner to buy property. Now, when houses were coming in to buy houses or this and that, what we see when Italians and Greeks came to Australia, what they did, they bought a lot of acres, a lot of lands, and then we're gone bust on the 1990s, the recession that we must have. 1987, we lost the triple A rating in Australia, and things has gone through. I think we'll be going very similar thing. Last year we were about to lose our triple A rating, and it's the way how it is. Now I'm pretty sure I'm blabbering on too much. So nowadays, the getting lending is a lot more difficult. But I'm trying to comparison with the social credit because you guys click on the video. Social credit is about your behavior. Those who are jaywalking, those who are spitting, those who do bad behavior on the street will name and shame and get a penalty fine, which is more like a Michelle Foucault, um, heavy surveillance. Now, why would that links with this video on mortgage lending? Now, I'll put a link down below, and I'm reading this article right now. Okay, so before when you purchase a house, you definitely have to go through credit check, right? Credit score. Now you have a clean record. That's great. However, nowadays with the Royal Commission has banged on the banking sector, things has turned a lot 360. You see, back then people would do forgery on tax, on employment, and people get houses very easily. And you know, brokers and big banks were doing it as well in Australia or other countries around the world doing the same thing to lure people in, and that's when the housing just went skyrocketed, especially in Australia and Canada has skyrocketed so much. And cash in hand or money laundry or drug money or any money was to become clean money, and you can purchase a house, or even if you're not even incapable of owning or paying your weekly mortgage is hard, right? Or monthly or fortnight, whatever the answer is. Some people say it's a negative gearing. So nowadays, it's not only just having 5% or 20% or your credit score. Now, it's a social credit. It's worked exactly the same thing, but just different metaphor. You see, I'm going through this article now. See, Uber Eats. This work can work against you because look, I never ordered Uber Eats before, but I'm pretty sure it's costing 2, 3 times more. So when a bank sees that, it's saying that, oh, okay, why didn't this person wouldn't be able? I'm just saying, for example, McDonald's, right? McDonald's like $10 a meal. Why we need to spend 30, $40? Or I don't know how it works with Uber Eats. Sorry if I'm wrong. Like 20 or $30. He must be a lazy person. Must be playing games. Must be watching TV. Just don't want to get out the house. Just lazy. But willing to spend extra 20, $30, where that person can get is ass out of the seat and go out, get his car, and drive to the place and bring it back. So Uber Eats is one of them. And obviously, childcare. Obviously, if you have a child, you have a lot of expenses. You take your kids, your hospitals, or childcare, or tutoring, or whatever. So that means you don't have much savings, right? Because you spend much money for the child education and things like that. Now, obviously, they're looking every single dollar that you spend, such as insurance, telephone, internet, and groceries, medicine, and health, and this and that. It kind of makes sense. When you have, that's the daily stuff. But like, they look into your Netflix as well. Do you have Netflix? I'm amazed. Like Netflix, how much is it? Is it $11 or $12 per week or month? I don't know. I'm just saying, like, this sort of stuff. Once it's on your bank statement, they don't like it. It actually does harm on your credit, social credit. If you're banking, like if you're for legibility, like, oh, this guy in his leisure time, he's just you know going out. Now, an article stated that as a single person, it's harder to get a loan. Obviously, if you're a married or couple or family, or I don't know about family, but married couples will be a lot better, a lot easier, because there's dual income. Because they want to secure the increase the chances on the person that definitely will pay. Definitely will pay off their weekly mortgage or monthly mortgage or whatever you guys call it. And is a way of doing it. So they wanted to know you maximize savings and you're paying principal, you're paying on time or interest only. And it's all about that. And they just want to know, the funny thing about the article talks about like how often do you move in a year, like moving houses. What classified as you as a stable person is within 3 years, if you move into one property or one housing or one rental, you're a secure person. So they look very deep on that. So what if you change too many jobs? You're not stable. Well, there's no such thing as job security nowadays. But obviously, permanent full time or part time is a lot sounds a lot better with casuals. But apparently, casual sounds a lot, works it well. Of tightening lending, they want to do loan tests and things like that. Blah 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 blah. I'm just going through all this now. Okay, so here's are my notes that I write on the side. You know, Before chasing Australia Dream or America Dream or anything like that, it was easier. You borrow money, you pay, you buy it, and there you go. That's your house, that's your car, whatever. Now it's gone harder because when as things gets higher, then people go to third tier banks or broker to get a loan, which was happening. But that doesn't stop the forgery of employment and tax. So there's a big bubble going on. So they trying to check out your lifestyle, your health, are you eligible, and even let's just say, even if my father gave to me 50% worth of money, that's common. Let's just say my dad gave me $250,000 for a $500,000 property right there. I'm still not eligible for it because everything has to be, even though it's a gift by your parents, but it has to be. They want to find out where's the money coming from. You're secure, even having inherit money or gift money. It doesn't secure your bank loan. So what actually secure a bank loan? Now, before people buy houses, you usually, I'm just saying, past decade, usually anyone could buy a house. If you earn like certain amount of money, you can buy a house. They'll, bank will afford you. You're easy to get the money. You get the loan, things like that. 700,000, 1 million back. Now it's so difficult. Now I know a friend who works in the broker, and I told the person, I was like, "What's the price, or what's my income, or what's me and my partner income if I wanted to borrow 1 million?" And the person told me, "You and your partner combined income 250 a year, 250,000. So that means you have to be two doctors or two lawyers or two engineers for eligible for 1 million. Okay. Um, and 1 million, I know 1 million you can't get closer to city, um, or nearby city in Sydney, in Australia. Melbourne, you can get 7 kilometers. You can get 1 million a property around there. But I'm pretty sure if you're a dentist or lawyer, I'm pretty sure you have 20% saving, right? So you have 200 grand on your bank account, let's just say, and you wanted to borrow and purchase a house at 1.2 million. But I'm pretty sure the prestigious professions, they have larger, greater than $200,000, because they like to play safe. They're a lot more conservative. They're a lot more safety net when it comes to their money. You see, back in the decade, people who works in casual or single moms or things like that could get a property that easy. You know, it was so easy, but now it's high professions. So, regardless if you're high profession or working in the low class, basically what they really want to see from you. Oh, I haven't mentioned about this. They also check on your social media account, see if you're partying or you're doing this or you're drinking up or things like that. They want to make sure your candidate on submitting to the bank slavery on 100% paying. You'll pay off. You're secure. And also the afterpay. So afterpay is pretty much it's like lay-by, but you get your stuff on the spot. So you have 4 installment payments. If you do afterpay on your account, that's a no-no. It's saying that, oh, why that person be on afterpay out of nowhere? That also, your social credits rating devalues. You know, the best of the best social credit rating is be a workaholic and no social life, and make sure all your money, your paychecks are taxed and coming to your bank account, not from cash in hand. Basically, that's the way how it is, and that's 100% on candidate on putting it there. Now, what does that means to you? You know, which this actually tells you that this is more of a conservative privilege. Now, apparently, conservative is like it's not a popular term nowadays, right? But what the banks are trying to do is trying to bring it back in a very conservative, finding out the most responsible, mature-minded, take life and bank and mortgage serious with a safety net, conservative, cautious mind, instead of someone's a single mom or things like that who plays around or things like that. So there you go. There you have it. Now I'm going to go to my screen and see how long is this video. So what does that mean to you? I explained to you guys, and got the social credit in China, because what happened in China is there's too many people um, not paying their tax or tax avoidance or doing cash in hands and things like that, and government try to tackle down, and there's too many scammers, fraud, and there's a lot of social behavior. But we're seeing the exact same thing, but in a different spectrum, a different form of social credit rating for your bank loan. So it's sort of similar to applying for middle or upper class job, because a employer, what they do is that, okay, you pass the job interview question, okay, you pass the rounds of interviews, okay, you pass your police check, your psychological and physical test, and you pass everything. But before we give you get to your referral stage, or perhaps a contract stage, a reference stage, checking on, We wanted to know what type of person are you? See, you heard about the things that, oh, they go through your LinkedIn profile, your Facebook, see what type of person are you, this and that. So, are you a traveler? They don't like that if you travel too much because all you care about is just travel every year. You're not putting 100% of dedication to work. Oh, you drinking, you're having parties and this and that. So it's more like a judgment call. Um, you know, judge you by who you are. But us humans, we cannot live. Nobody wants to live. Majority of us does not want to live the conservative lifestyle because it's boring. There's nothing there. It's all about playing safe, being saving. It's all about next generation, this and that. But what the banks are trying to do, and the social credit in China is trying to make sure that you're a good citizen in our eyes, in our belief, and you do whatever it takes to get to the stage. Now, whether it's boring or anything like that, I don't care. Now, you better not have your Tinder account or this and that because if you have a Tinder account, then you most likely will get, let's just say, sexual disease or high chance of divorce or finding another mistress. And when you have a mistress or divorce, that's money down the drain. So, could you see the similarity going on? One is through the bank and job. I'm not sure how the Western world, or let's just say, let's narrow it down the Western world, Australia. How is this going to be played out in the future? Because many people in the past has used loopholes, right? Where the accountants, the lawyers, the banks, they all work together when they did the forgery on tax and employment on for you to get a loan. But nowadays it's getting difficult. So why is it to this degree? Because people are taking advantage. It was loosened up and everything. It's like the same concept in the self-serve checkout into supermarkets. Many supermarket giants has lost billions when they introduced these self-serve. Now they're still going to continue to play the role because it's still cheaper than hiring a worker, right? So what they're going to do, China has already invented AI on the moment you put the item on the scale, on the barcode, they already know what's the item already. So in a couple of years, what the supermarket giant will introduce the AI camera, so you can't lie. They give you take advantage now. When we caught you, we're going to introduce even better, more surveillance, more rules, more on the paper. So you have that now. It sucks, right? Imagine a $1 million loan, $500,000 loan. If it's 500,000, then you have to divide it by two, right? If you divide it by two, 250,000, there's like 140 something thousand. You and your partner, that's more than 70K each of your partner has to earn per year and has to live in a conservative, very, very conservative lifestyle. Yeah, that's the video.